Welcome to the Daily Fool. I am Travis Hoium, joined by Jason Moser, as always. Jason, how you doing? And what are you thinking about this market this morning? We're up a little bit. It's a little bit surprising given everything that happened over the weekend. Seemed like the futures were going to be down late last night, but that's definitely not where we're at.
This has been a market that, clearly very headline driven. It seems to defy all expectations at times. I don't know what to say about it right now, other than I'm glad I remain invested. But it does feel like we're getting the valuations with this market definitely continue to get stretched. I saw a funny tweet earlier today. It said something I can't remember who said it, but it said the entire market right now is being driven by 7 companies that just keep on giving money back and forth to each other. And it kind of feels that way, right? There are 7 companies out there that seem to be really steering the bus, and everything else is just sort of, following along for the ride. But it's headline driven.
Speaking of, that's one of the things we're going to talk about today is some of the money passing back and forth between Nvidia and Coreweave. IonQ also made an interesting acquisition that you're going to talk about. We'll talk about this VR winter, and then the week ahead we got a ton of earnings reports to get to. But let's start with a quick update for the market. I'll pull that up, and then I've got a heat map here, which I think is just interesting to look at. But we've got, S&P 500 is up 0.5%. Or so. NASDAQ is up 0.6%, and then Dow Jones, as always, just a little bit behind at 0.33% for the day. The heat map I thought was a little bit interesting because Apple is leading the way. I don't know. Apple continues to have this ride. Yeah, they're going to report. I think it's after the market on Thursday.
Yeah.
But Apple just continues to crush it, despite the fact that it seems like they haven't really done anything new for like 8 years. but apparently that's been the best strategy for them. And then you got laggards like Tesla, Nvidia, AMD. But overall there wasn't a ton of news over the weekend that was driving companies, at least. So we'll see what things look like. We're going to definitely change when we get to earnings season, really, after the market today.
Yeah, and I think that in reference to Apple, there's some pretty great expectations for this quarter that they're going to announce, because if you go back to the previous quarter, Tim Cook said in the call, he's like, listen, we expect this holiday quarter to be the greatest revenue quarter for the company ever, and the greatest quarter ever for iPhone as well. That's a bold statement, but they do have a pretty good track record of hitting their targets. And then you top that off with, Apple Intelligence. I'm not really sure where that's ultimately going, but it does sound like they're at least making some progress in establishing relationships. Sounds like they're going to be relying a lot on Google's Gemini models going forward.
Yep.
I'm an iPhone user, Travis. I don't know about you. I will say I don't think I've ever actually used Siri, at least on purpose. It just doesn't ever seem to really be that helpful. So I'll be fascinated to see if this actually has a material impact, or at least if they can take these Gemini model features and produce some other sorts of compelling AI-driven features for the phones and the rest of their hardware.
It's going to be really interesting to see what this more passive use case is for artificial intelligence. Right now with something like a chatbot, you have to intentionally go into Gemini or ChatGPT or whatever you're using, put in a prompt, ask it a question. It's more like using a PC, in the early 2000s or in the 90s.
Yeah.
The change with the smartphone, when that came out, when the iPhone came out, was introduced in 2007. The real change there was that all that information was just in your pocket. So now if you had a question, I'll sit at the table with my kids, right? And they'll ask a question about penguins or something like that. And I can actually answer the question. Whereas, with me growing up in the 80s, it was maybe in the encyclopedia and you had to go dig it out. It was a pain finding that information. So now, do we get to a point where there is some sort of a passive device? I'm using AirPods for this because, we don't want to get feedback for the audio, but do you just start wearing your AirPods all the time, and then when you have a question that maybe Gemini could answer, you can just go, hey, what's the answer to this question that I have? And it just speaks to you passively. That's why I think, companies have been talking about, we've seen like the Humane Pin. We've seen rumors about Apple having some sort of a pin. I always think that's funny because it's like everyone looking like they're a corporate employee, right? With like a lanyard, and some sort of thing hanging out your neck. It's just a strange future that I don't know if I necessarily buy into that being a phenomenal use case, but they're going to be trying because all these companies want to know what the hardware future for artificial intelligence is, and they're all going to be at least throwing something at the wall. Apple. The interesting thing when they actually rolled out that artificial the Apple Intelligence, I don't know if you had the same experience, but I shut it off almost immediately because it just drove me insane. It was just so poorly designed. The apps that they created for those little character things was janky and just terrible. So it will be interesting. Gemini's obviously figured some things out. They're leaning on Gemini and Google. Can they translate that to something that is, a really good experience for those of us who use Apple devices? We'll see.
Yeah, and then I mean, you add OpenAI into the mix there. I mean, they continue to talk about this device that they are working on, and sort of this evolution beyond the smartphone. I'm not sure exactly what that is. It's really hard to kind of imagine, but who knows? I mean, right? These are not dumb people working on these projects. So I imagine we'll see a lot of neat things coming to market over the next 5 years.
Speaking of things that are coming out, deals that are coming out, let's talk a little bit about Nvidia and Coreweave. This was announced this morning. Nvidia is investing $2 billion in Coreweave at $87.20 per share. So they've already made, as of trading right now, I don't know, $500 million on this investment, which is always just crazy. I just want to give my quick thoughts, and I'll turn it to you. But when I look at these deals, and we talked about kind of the money circle going around in artificial intelligence, when the money circle involves Nvidia, I always tend to think about how does this further Nvidia creating a platform around itself. And what I think that investors need to think about is the fear for Nvidia is companies like Google, Amazon, Meta aren't reliant on the CUDA ecosystem. So they can sort of change out chips whenever they want. They can, use TPUs, for example, AMD's chips. And that would be the fear, is that the Nvidia platform is what they want to create. And when you have, I think it's 60-something% of their revenue coming from the top 4 customers, I believe, if I'm getting, it's a very, very small number of customers generating a vast majority of the revenue for Nvidia. You want to have companies like Coreweave that are building out capacity and allow you to create that platform. And so it is a beneficial relationship between the two. The thing that stuck out to me is they want to build these AI factories, as Nvidia and Jensen Huang have been calling them. And then this is Coreweave's announcement. They're leveraging Nvidia's financial strength to accelerate Coreweave's procurement of land, power, and shell to build AI factories. So they're sort of explicitly saying, we are a semi-subsidiary of Nvidia. We are going to leverage their financial strength to build the stuff that we need to build. And by the way, we're going to be a preferred customer because Nvidia has a financial stake in our success. But what are your thoughts when you see these deals? Because Coreweave stock is up, I think it was 8 or 9% early in trading. So it seems like the market's reaction has been pretty positive.
Yeah, no question. Well, I mean, I think it's interesting. The operative word you use there in regard to Coreweave is leverage. I mean, if you take a look at this company's balance sheet, this is a debt story, isn't it? I mean, you look at the coverage ratio, for example, where operating income versus interest expense, and I mean, it's upside down, right? They're not covering that interest expense even anywhere close to it. And that debt that they have, I mean, somewhere in the neighborhood of $20 billion or close to it. I mean, that is expensive debt. Those are notes at 9% and more. So I think that's the one thing that's always been a little bit scary about Coreweave, just in regard to its financial position. But when you think of the Coreweave story, I mean, it really does involve Nvidia mostly, right? I think Nvidia, before this investment, they had already invested, I think, somewhere in the neighborhood of $6.5 billion in Coreweave already. Mm-hmm. And it's ultimately just because, Coreweave represents this big data center, and these data centers are full of what? NVIDIA technology, right? Exactly. And I think that's going to continue to be the case. And so I think the leap that you have to make is is this data center future? I mean, it's obviously happening, but is it going to monetize? Is it going to produce the way investors feel like it is today? I get the idea with NVIDIA coupling up with Coreweave. I mean, this is a power play as well. I mean, this investment is going to help Coreweave accelerate the build out of 5 gigawatts of AI factories by 2030. Now, Travis, I did some research here, and I got some fun facts here, because when you say gigawatt, I mean, I don't think a lot of people really understand fully what that means. I mean, it's obviously it's a big number, right? But how much power is a gigawatt? Well, it's a lot. It's enough to power a medium-sized city. And according to the U.S. Department of Energy, a gigawatt is equal to half of the Hoover Dam. It's equal to 1.887 million. So I think that's actually over almost 2 billion photovoltaic panels, 100 million LED bulbs, roughly 1.3 million horses, and it's also equal to 2,627 Tesla Model 3s. So that's just to give you an idea of the power that is behind a gigawatt. Those are some pretty big numbers. I found that to be pretty interesting. But I think my other point there is supplying that level, that magnitude of power is obviously not easy to do. There are some real barriers into accomplishing that. And I think for CoreWeave, getting that backing from Nvidia is going to be core to this company actually succeeding. Again, I go back to the debt. It's scary, right? It is just scary. And
let's dig into that. Yeah, let's dig into that debt. Okay, so I've got all these numbers here. I'll pull them up slowly, but this chart gets really confusing if you add all these numbers. So in blue here, we have total revenue, and then purple is free cash flow. So free cash flow is going to include all the capital expenditures they're making to build out the products that are going to generate this revenue. So you look at the revenue growth rate, 430%, even on a year-over-year basis, really, really strong growth rate. So that's great. The challenge is, cash from operating activities, are these profitable? We don't quite know yet.
How much stock-based compensation's in that too? I didn't even look.
Yeah, the stock-based compensation. Okay, but then here's what you were talking about. This is the balance sheet. Okay, so green is cash, and then yellow is the current portion of long-term debt. So it's short-term debt due within a year. Red is long-term debt, so it has a duration of longer than a year. So you're looking at almost $14 billion worth of debt as of their most recent quarter. If my memory serves me, these are not phenomenal terms that they get on this debt. This is not, Apple going out and getting debt for, basically the same as the US government can with treasuries. This is more like, 10%, 11% debt.
Yep.
So it's pretty expensive debt. You got to generate cash flow. And by the way, depending on how long the duration of this is what's really confusing about looking at companies like this is if you spend, let's say, $1 billion to build out a data center, there's going to be multiple pieces of that. So the building, the infrastructure may last 30 years. You depreciate it over 30 years or 50 years. Yeah. The chips, this is the thing that, a lot of investors are sort of worried about now is how should you be depreciating those? Should we be depreciating them over 3 years, 4 years, 5 years, 6 years? And it's very confusing because right now what we're seeing is we have really high demand even for older chips because there's so much demand for this AI compute.
Yep.
The problem is this is much more like a commodity business where when demand exceeds supply, even a little bit, so think about like the oil market. Okay, if you have demand for 10 million barrels of oil, but you're only making 9, the price can go up dramatically, because there's not a lot of elasticity of demand. You need to get to work. You need to buy gas, whether it's, $1 a gallon or $5 a gallon. But if now suddenly there's 11 million barrels of supply and 10 million barrels of demand, that demand gap doesn't get filled. So then the prices start to come down really quickly. So that's the risk here. And again, what Nvidia is saying is we need this capacity to be built on our platform, and we need our platform and not TPUs and not AMD to be what everyone else is building on top of. So it's in our best interest to help fuel the companies that are building the capacity that then decide what that platform is. I think that's always the way that I think about it. So these deals are circular. It's a little bit confusing to figure out, does CoreWeave have a phenomenal business? Do they have a super, super risky business? Is Nvidia artificially inflating their demand? Are they just making a phenomenal financial capital allocation because they have the cash and they can put it into Nvidia or into CoreWeave? I don't know. Lots of questions here.
Yeah, and I think the market. I mean, given what we know about CoreWeave, just in regard to revenue generation, profitability, the state of the balance sheet. I mean, it's not. I mean, it's had a great run as a public company. I mean, it just came public, I think, last year, right?
Yep.
And I mean, it IPO'd at $40. I mean, today around 110, something like that. I mean, hey, not too shabby. I think the market gives it a lot of credit simply because of this large relationship it has with Nvidia. Nvidia is going to keep this company afloat, I think, at the
Yeah.
end of the day, because they have such a massive investment now. It really, I mean, it almost cannot fail, right? I mean, Nvidia is going to have to figure out something to make sure that CoreWeave succeeds.
Absolutely. Let's go to another hot topic. IonQ. We were debating before the show whether it's Ionic or IonQ. I listened back to some of the conference calls. I think we got this right.
The
IonQ
important stuff.
is acquiring Skywater technology. This is a fab company. It's actually headquartered not too far from where I am right now.
Yeah.
What should we know about this one, Jason?
Well, I think we're admittedly still very early on, but I think quantum computing actually is shaping up to be an attractive opportunity for investors over the coming decade, right? This is not a story that is just taking shape right now necessarily, but I think it's going to be something we're going to be following for the next decade. And at its very core, quantum is about developing more powerful computing than what today's classical computing methods offer, which totally makes sense. I mean, tech moves fast and it's doing more now than ever before, and that will likely continue to be the case, which means we need more powerful computing. And so you look at IonQ, like you said, that is a hardware software company in the business of building the quantum computers and the software that go with them. An interesting business on its own. Skywater, as you said, it's a foundry, right? It's a semiconductor foundry that produces integrated circuits and photonics, micro electromechanical systems, those MEMS that we talk about, and they serve and more. And they serve the aerospace, defense, automotive, biohealth, and in the quantum markets. And so this really, I think, from IonQ's perspective, this is about becoming the ultimate vertical quantum computing company, right? I mean, they want to have everything in-house to be able to build out this quantum opportunity on their own terms. And the deal is for $1.8 billion. In Skywater, if you look at Skywater today, they're projected to book around $600 million in revenue this year. So pricing that at somewhere around what? That's 3 times sales or so. I mean, that doesn't seem too terribly absurd. And when I say that, I am putting that in the context of IonQ, which to date is very minimal on the revenue side. And if you look at the stock where this company has grown today, I mean, the market capitalization, this thing is over 200 times sales. So it is, I would say, scary from a valuation perspective, but the market has really caught on to a lot of these quantum specific companies, and certainly IonQ is going to be one of those pure plays. I think if you're looking at IonQ as a potential investment, it's one of those ones where you allocate accordingly, right? You only need a tiny little bit, and I'm not sure I would be jumping into it today. But it's interesting to see. I think I saw this IonQ was actually up on this news, which, well, it was. Now it's down a little bit, but you normally see the acquirer get dinged and the acquiree feel some of the love there. But CEO Niccolo De Masi of IonQ, it all goes back to Nvidia, Travis. He said in the release, this is our move to make sure we are the Nvidia of quantum. And need I say more?
I showed some of the financials. Not a bad business. Their operating leverage is kind of kicking in. I wanted to give some stats, and this is from Gemini if there's any mistakes, but I just wanted to kind of get a breakdown of what does this company Skywater do that an Intel or a TSMC, sort of where do they fit in that category?
Right.
Their smallest node, Skywater's smallest node, 65 nanometers. TSMC and Intel are now making what they call 2 nanometer chips right now. The wafers are a little bit bigger, so it's specialized on different kinds of computing. It's not really an apples to apples, but I think what you said early there is probably the key, is that IonQ and some of these quantum companies are going, okay, we maybe don't need the same technology, the same infrastructure, that's the same capacity build out that Apple needed when they wanted to make their chips better, we're going
Yeah.
to need something different. And so owning this supply is a way to do that and sort of buy the R&D and the capacity and be able to learn. Now, that said, what I think is interesting here is IonQ's market cap as we're recording right now is about $17 billion.
Yeah.
And if you look at that and you look at, their price to sales and you look at what they're actually generating in revenue, which is very, very minimal, I could make the argument that the smartest thing they could do is make these big acquisitions when your stock is high.
Oh,
So
yeah.
that you buy up this stuff that you need to build that future that may not arrive for 10, 20 years. Now, from an investment perspective, what I think is interesting here is I like when a company is aggressive when they have a high stock price, because that might not last forever. If your stock drops 90% and you didn't use that opportunity to raise capital or buy it or make acquisitions or things like that, that's a lost opportunity. So I think that can be smart. But from an investment perspective, this is one where it's more IonQ is more intriguing to me today than it was yesterday, but I still don't want to pay the price.
Right.
So if the stock drops 70, 80, 90%, let's say sometime in the next 5 years, now I'm going to come back to it and go, okay, but they've made these acquisitions with that high stock price at $46 a share. If I only have to pay $10 a share, or, now I'm getting more of a steal and they have a better vertical integration. And so this is where following the market and following some of these details can be really important, because it may pay off for a decision that you make years from now. I'm just, as we kind of compare this moment to things that were happening in, let's say, the late 90s or early 2000s, or, moves that companies made in the 2000s that didn't pay off until, 2015. That's what I kind of think with some of these quantum companies. They're not real today. That doesn't mean that they won't be real in 5 or 10 years. And so when there are those opportunities, I want to know who's in the lead. IonQ making a pretty good case.
Yeah, and I love how you sort of split that off between, there's the company's point of view, but then you also have to look at it from the investor's point of view as well. And today from the investor's point of view, you're kind of looking at that valuation and the questions regarding quantum, and you're like, how long am I going to have to wait here? From the company's perspective, you're absolutely right. They're taking advantage of just essentially cheap currency with that valuation so high. And to be sure, this deal, it is a combination cash and stock. The Skywater shareholders will get $15 in cash per share, along with $20 in IonQ stock. And, IonQ has made several little acquisitions here over the last few years. And I think probably can expect that to continue. And if I would imagine it's probably when we see the stock take a hit, because we know the nature of investing. That's just what happens, right? It's never a straight line up. And with a market like this, that is still, I think a lot of people would consider quantum today more speculative. It's real. It's not something that is going to be an if, but a matter of when. But it is so far out in the future. In let's not forget, it is a bit more of a difficult market to fully understand. We probably will see a point where that IonQ stock pulls back, becomes a little bit more grounded in reality. But then by the same token, investors then know that they've got this company that is vertically set up to really capture as much of that market opportunity as they can. So yeah, it's something that's going to require obviously a lot of patience. And I think for me, I think IonQ is a neat company. It's an interesting story. So it's one that I'm following. It's also one that I'm just going to exercise ample patience with.
Yeah, and like you said, that capital allocation is important. Let's just go. I wanted to give an example of what I'm talking about with taking advantage of these dislocations and high valuations in the market. This is GameStop stock. So, one that people probably familiar with. 2020, the stock was trading as little as $1 per share. Obviously, went on that crazy tear. I think in the 80s was its peak. They did actually raise some capital, but you can see, like, when the stock goes down, if you didn't raise that capital to do the next thing, then you're in real trouble. I'll give you another example here. So just to go back to IonQ, this is their opportunity. The stock was at $7 in 2024, been on a bit of a crazy ride, but now you've got to start going, okay, we don't have a cash flow positive business. What can we build or buy with this currency, as you said? Let's look at a company that did not do this well, that I have made mistakes in, and that is Virgin Galactic.
Oh, yeah.
Virgin Galactic, I actually remember talking to management about this.
We have Virgin Galactic and also, IonQ, another one of those SPACs. And we saw several years back. I mean, those SPACs for the most part have not worked out. There are a handful that have, but I think it's always worth remembering that sort of reverse merger. That's IonQ was a SPAC as well.
Yeah, and Virgin Galactic is actually a SPAC before SPACs were popular.
We were
back in
SPACing before it.
2019. But you can see this is split adjusted, but $1,000 per share. Even going back to this period of time, $100 per share. If they had raised $5 billion, they would have been able to pay for all of their hopes and dreams for the business, but they didn't, and they weren't cash flow positive, and eventually the market loses faith, and when your stock starts dropping and dropping and dropping and dropping, you just eventually get to a point where how are you going to raise capital?
Yep.
And
it
so
becomes so much more difficult.
Right. And so that's where these kinds of moves can be really smart.
Yeah.
Raising a bunch of capital when your stock is high can be really smart, even if I'm not going to buy the stock because I think it's too speculative, I think it's too highly valued, but the companies that are doing this well can actually sort of live through that trough of disillusionment that we potentially will go through with something like quantum and come out on the other side stronger.
Yep.
So interesting move from them
For sure.
Last thing, I think you had something you want to bring up with VR. Interesting headline about what's going on with Meta.
Well, yeah, I mean, we've seen Meta over the years really pivot to going away from being a social media company to really now they're becoming the metaverse company, so much so that they changed their ticker, of course, changed their name. And now it appears that they are pivoting once again. They did just note that they were laying off another considerable portion of employees in their Reality Labs unit. I think they just last week announced another 10% of the workforce being laid off there. And I'm of two minds of this. If you remember, like back in 2019, we opened up an immersive technology service here at the Fool. It's called Augmented Reality Beyond, and I was I had the good fortune to go ahead and spearhead that and open it and lead it and bring in a lot of recommendations. And at that time, the attitude regarding immersive technology, augmented virtual reality, was one of a lot of excitement, a lot of potential. And this is the direction things are headed. And we're waiting for the big kahuna, Apple, right, to announce their device. Because once you see Apple,
which we knew was coming even back then.
Yeah, we knew that project was there. And then you figure, like, once Apple brings that device to market, now you get validation. Because Apple has always been kind of like, hey, we don't want to be first. We just want to be best. You fast forward to today, and the opportunity has not materialized, I think, the way it was anticipated to. And I think there are certain applications where immersive technology makes a lot of sense. I mean, we should certainly industrial applications where it makes sense. Obviously, in the gaming world, it makes a lot of sense. But it has not. They haven't, at least not yet, found that killer app or that thing that makes everybody say, "Oh man, I need to have that." And so you couple that along with the progress being made in AI. I mean, now Meta is really primarily focusing on that AI opportunity, and it certainly seems like the immersive technology side of the business is going to be taking a back seat for a long time, if not indefinitely.
Yeah, it's going to be really interesting to see what they do. They obviously have not seen product market fit with their products, and this is the chart that I was just showing. This is the revenue for Reality Labs. What's crazy about this is it's essentially flat from 2021. $2.3 billion in revenue in 2021, a little over $2.3 billion over the past 12 months. And these losses have exploded. I mean, $18 billion in operating losses. So it's clearly not working for Meta. And they made the acquisition of Oculus. Was it 2013? It was quite a while ago. And that was about a $2 billion acquisition even back then. This is a fascinating example of technology that I think still has a lot of potential. I actually started a VR business, started in 2017. We launched in 2018, but it was we called it a VR lab. You know, some people called them arcades, but we were trying to think of things a little bit differently. And how do you get people into headsets? Because the problem that we saw was not that the technology wasn't great, it was that the problem is the last inch. Okay, I mean, you heard about the last mile with like things like delivery and things like that. The problem with VR and AR is the last inch. How do you put a headset on somebody and explain, here's what you're going to do, here's the application that you're using, here's how to switch applications. I remember the first time that I saw an iPhone, it was a few days after the iPhone came out, and somebody had it at the bar. And 100 people, I'm sure, saw that iPhone that day. And you could just viscerally know, okay, this is what the iPhone is like. This is what it feels like to touch the screen and move apps around and stuff like that. You can't do that with a VR headset.
No.
You can't bring a VR headset to a bar or a restaurant and show people, try this on. Even setting it up is just not that trivial.
Yeah.
So that was the problem that we were trying to solve. And, you know, just to go back to, I think it was Buffett's famous line, I'm a better businessman because I'm an investor, I'm a better investor because I'm a businessman. It's fascinating to go through that process and think about, what does the future of this technology look like, and where's the gaps? What is Meta going to be able to do that we can't do? What are we going to be able to do that Meta can't do? What Meta still has never ever been able to figure out is that last inch. Where are they selling these products? They're still trying to sell them online. You can't try out, you know, a headset before you buy it. You can't, even the glasses, the Reality Lab, the Ray-Ban glasses. Maybe those would be cool, but do I want to spend that kind of money on a pair of glasses? I've never tried them. I've never, you know, so there's a huge problem there with just what you would call the go-to-market strategy for these products, and it's a fundamental technology problem. And Apple seemed like they would have an advantage there. They just went so high end that I think, you know, $3,500. Yes, there are a ton of industrial applications where this could be insanely valuable. The problem is you need to have a critical mass of headsets. You need to have the people that can use them, particularly the workers who are going to actually be going in and like putting pipes in the floor or whatever application you're doing. But you have to have that infrastructure in place to build the project in 3D. Just to give a quick example, one of the killer use cases for VR and AR is in architecture and engineering.
Oh yeah.
It's a no-brainer. You're building a digital model. Putting that digital model into a headset is trivial. The problem is that entire ecosystem is not built to do that, to understand how to do that, to have headsets on site. And companies have tried. I'm not saying that companies haven't tried, and there are some really, really interesting businesses. But it's nowhere near standard operating procedure. And this far into the iPhone cycle, for example, this would have been 2015. Like, it would have been standard to just be able to have a smartphone in your pocket. So we're nowhere near that adoption. We brought in a company that was doing development, residential development, so a new development. And we said, wouldn't it be great if your customers could walk in, go into this home that they're thinking about buying, that right now is just a plot of land, you know, the road isn't even there, and they could go into that home and they could walk around. You could change the marble or granite on the countertops. You could, one of the things that I talked about with somebody was the height of walls, or like how much space you have between an island and the counters. There's little things like that, right? That you can go into a digital space and feel those out. Here's the problem. They were still working on paper. So, I mean, this was 2019. So there's just so many hurdles that a company like Meta is not going to answer that question. They're just fundamentally not equipped to be able to say, okay, engineering company or architecture company, here's how we answer this question that you have. They make technology and they throw it out to the world, and they've never had a good relationship with developers. They made it very, very difficult to develop for headsets and to distribute content on headsets. It's one of those chicken and egg things, and I think we will eventually get there, but it's probably better for the ecosystem to be small and more organic than it was for a company like Meta to come in and say, hey, we're going to own this and here's our vision. Because it just, big companies are not good at creating that vision for the next layer of technology. You have to have like an open AI come in, and like Google was incapable of creating the chatbot the way that OpenAI did. They could copy it, but they could not create the new thing.
Yeah.
I think the same thing happened here with VR. AR, I think we're maybe a little closer with AR because it's a little less prohibitive. Just put a pair of glasses on that you can see through. But that's my take. I think this is a challenge that the industry has been needing to grapple with for quite a while.
Yeah, and I agree. I think AR, there are more use cases, and it's a little bit less of a leap to get people to use it, because I think you can have less cumbersome form factors for one, right? I think form factor has always been a real roadblock for a lot of this. And I think really kind of the dead giveaway was when Apple brought the Vision Pro out. Listen, man, I went to the Apple store and demoed the Vision Pro, and I was like, wow, this technology is magic. It's amazing, right? I've tried the Oculus as well. At the end of the day, I'm like, well, I don't need this device. It's not something that I really, and certainly not going to spend $3,500 for it. And so, yeah, you could kind of see when Apple really failed to gain traction with that device, the Vision Pro. I think that really said a lot, because, again, Apple's not about being first; it's about being best. And so, typically, they have a pretty good batting average when they bring new technology to market. And this one just didn't work. And I think just too many hurdles to get that mass adoption.
Yeah, I think that's right. So, I think CNBC wrote about potential for a VR winter. I would argue we've been in a VR winter since like 2019. There's a lot of companies. Next VR, I don't know if you tried their stuff. They were kind of the first to show like basketball.
I've not, but I know you're talking
content
about
and stuff like that in VR. There were some interesting things going on back then. There was a ton of funding going into new companies, and all that funding dried up. So it's tough to build an ecosystem where you don't have that kind of innovation engine.
What are the odds? What are the odds that Meta changes the name of the company and/or ticker in the near future?
Gosh, they need to go back, right? Can he just undo it? Can he get FB back? Or is he going to go like FAM, family of apps?
It'll be funny to see.
Let's talk about the week ahead.
We will
be back every morning this week. Tomorrow, I'm interested. I'm curious to see what you're interested in, but tomorrow I'm going to be looking at GM. This is one of those extremely unloved companies. Guess what? They're growing faster than Tesla. Their stock is performing better than Tesla, depending on the time frame that you use. But over the last 5 years, I think they've outperformed Tesla. They make money. They're buying back stock. Pay attention to what they have going on, because buying a company like that at 7 times earnings, which I think, even after the recent run on the stock, I think they still trade for about 7 times earnings, could be interesting. So we'll see what they say. American Airlines also may be one that we look at depending on what they say. But the big stuff comes after the market closes on Wednesday, where you have Microsoft, Meta, and Tesla, and then obviously Apple after the close on Thursday. But what are you excited about?
Just from a personal perspective, I'm interested to see what UPS says. As a shareholder, I just, I'm always paying attention to it. They made a decision a little while back to really sort of decouple themselves from that Amazon relationship. It was great for volume, but it was really horrible for profitability. And so they really decided, hey, we're going to focus more on profitable growth, cut a lot of that Amazon volume out. We're really going to cut the fat here within the company. And they've done a really great job on the cost saving side of things. But the question that's sort of still hanging out there, with the price today, the dividend yield is 6% plus. And, Matty Argersinger and I've been talking about this for several quarters now. We're just kind of, you're waiting. They are committed to that dividend. They say it, but man, it is subject to board approval. I'm hoping that we see some good news here today or tomorrow in regard to the dividend. That's what's just kind of held me back on the stock a little bit, but we will learn more tomorrow.
Yeah, so check us out tomorrow. Like I said, we will be back. I think tomorrow we're looking at a little bit earlier, so we'll be 10 a.m. Eastern. We will be back with the Daily Fool. Join us, ask questions. We're happy to get to anything that you want to talk about here on YouTube. Thanks for watching, everybody. We'll see you tomorrow.